Good afternoon, ladies and gentlemen. Welcome to our channel again. This is Cryptoeconomics on YouTube, and we hope that you followed our educational course so far. Now, in this current video, we're going to continue working on our technical analysis course, where we are currently in the third video, where we're going to talk about triangle formations. Follow our channel for our different types of courses. We have the course for the special analysis of crypto coins and tokens, the fundamental analysis course, as well as other activities on our channel. Now, as you know, if you've missed our previous videos, we are currently using TradingView for our charting purposes, and I would advise for you to see the previous two videos on our charting course, which you can find, as we mentioned, on the Cryptoeconomics in the playlist for technical analysis. What you can see is the chart of Bitcoin against US dollar, and we're going to be performing some technical analysis on the specialized triangle formations. Now, as we said so many times in our previous videos, everything you see in technical analysis is based on psychology of traders and investors. So these are previous movements and behaviors of people that are part of the market, for you to be able to determine what is the probability of the market going one or the other way. Now, there is no magic here. We don't do any spells. We don't have any all-seeing eyes and magic balls. At the end of the day, this is all psychology for you to understand what is the probability of the movement of the market. Now, next to our chart, I have made three basic, I would say, drawings. Not that good, but I think it's quite understanding, of triangles, where you can see that the right side of the triangle, the right, I would say, top of the triangle, is either between the highest and the lowest part of the chart, or it's above and below the starting points of the triangle. We can see that if the middle part of the triangle is somewhere between, which means it's practically more or less horizontal between the highest and the lowest part of the chart, the probability of the chart going one way or the other is more or less 50-50. The other way around, in the other cases, we have a situation where the price is going upwards through this triangle, and the top of the triangle is usually above the previous two starting points of the chart, as well as the other way around, downwards. Obviously, the chance that the price will go down once it breaks this triangle formation with the top upwards is that it's going to go down, and the other way around, when the top part of the triangle is below the previous two starting points of the triangle, the probability of the price going up, it's a lot higher. Now, again, this is nothing connected with magic, it's just psychological explanation. As we mentioned in the previous video, this is practically exhaustion of a trend in one and the other way. Now, we're going to find some major, I would say, triangle formations, and you're going to see generally how it looks like. Now, the triangle formation is a tool you can find again from the toolbox on the left, and you can mark it with a special sign. This is the bookmark that will allow you to have it on your, I would say, fast lane. Now, we can add the top, bottom part of the triangle, and we can find it in this particular, I would say, way. And we need to use the triangle in a way that the sides of the triangle will be actually touching the top parts of the candles, but in this case, we will be trying for it to be touching the actual bodies, not the candle shadows. And the other way around, in this case, obviously, we're trying for the starting point of the triangle to be on the body of the candle, and the trend going downwards, trend going upwards. What we can see, after the trend was exhausted downwards, obviously, when we have a lot of sellers, there is a point in every formation when the trend is exhausted and there is no more sellers. There is an accumulation phase that we have discussed in the previous video, and it starts going upwards. As we can see, comparison to the triangles we have, if the tip of the triangle is lower than the starting points, there is a bigger probability that the price will go upwards. We have several of those formations that we want to show you. there is another very large formation here that we can also show you. That is similarly, I would say, in this case. So this case, it does start a little bit higher, not to cut these candles. That's why it's a bit higher, but it's the same situation. We can see that between these two starting lines, I would say corners, the top of the triangle is a bit higher than the middle line, which is somewhere around here. And in this case, sorry, it's a bit lower. This is how it's going to be the triangle. And in this case, obviously, since we have this kind of triangle with the side being lower than the previous two corners, obviously the probability is bigger that it's going to go up than down. Now let's find a different triangle downwards where we can find different type of movement. Like for example here. Over here we can see a triangle which was going downwards. The top of the triangle is practically lower than the previous starting positions, and we can see in this case, after the selling was exhausted, the price started going upwards. Let's find upward triangle. Over here, if we put these starting points, we can see that over here we have upward triangle, which was several times corrected itself from the sides of the triangle. We can see similar situation in every previous formation. And what did we say? When we have upward triangle, there is a bigger probability that the price will go down. Again, there is no magic. It's just basics of understanding of how a chart moves. When the price is going up, it's just a matter of time before there will be a lot of people selling because the price is too high, and it will have a normal reaction of breaking out of the pattern and going downwards. The idea of using the triangles is more of when the correction will start. Why am I saying this? There is an unwritten rule that more or less works almost every time. The triangle usually does not break before it manages to fulfill at least 70% of the body of the triangle. So the chart and the corrections from one to the other side of the triangle usually goes at least 70% of the triangle before it breaks up or down. We can see similar situations, sometimes even more. Obviously over here it completely filled in the body of the triangle before breaking in one or the other side, and the other way around. So what I'm trying to say is that usually breaking out of a triangle is a very good way for a trader or an investor to know that he should enter or exit a trade. What am I saying? If we have a situation where we can see that the price is collapsing, and we have determined that this is a triangle phase, a triangle formation, we can see that in this particular triangle formation, the moment that the price breaks out of this triangle, probably is going to go up. As we have seen, the probability of downwards triangles is a lot bigger that the price will go up. So the moment that we have a clear breaking out of this triangle, if you were an investor, again, this is not an investing advice, and you invested, there is a big probability that the price will go up, and the other way around. Once we have seen that this triangle is forming upwards, we can see that the price is exhausting itself. We can see that there is no more power, no more buying power for the price to continue growing. And the moment that you see that the price is going out of the triangle successfully with a new candle, you know that there will be a bearish trend, and it's a very good time to sell. Now, this is the idea of how the triangle formations work. And as you can see, sometimes we have triangles that are lower, sometimes higher, sometimes undetermined. But no matter which time frame, triangles are always present in any different time frame. Again, let's go back to the daily time frame. Now, don't forget that in these particular time frames, you can find several formations into one. You can find literally formation in a formation in a formation, which sometimes, again, is just another, I would say, let me just find one for you to see. This is a very good example. It's just another, I would say, confirmation of what we need to do in a particular moment. Now, in this case, we're talking about more or less undetermined triangle because the side is somewhere between probably these two starting points. But again, Once it broke up, obviously we can see that it started moving in an upward trajectory. Again, why is this so important? As we said, it's all probability. Sometimes probability will be showing that this has bigger probability to go down, but it didn't happen. So it started going up. As I said, it's always probability. Never take it for granted. Never take it for 100% correct, but very important. It did manage to fulfill 70% of the body of the triangle. And the moment it broke through, you know that the price is ready for the next swing. Now, if we go onwards, we can see similar situations like that. For example, this triangle over here, we can see how this triangle have also fulfilled practically almost the whole body of the triangle itself. It's somewhere here, I would say, because we have more correcting, I would say, on the lower part. This is a bit hard to actually determine because we are trying to do it a bit fast, but still, at the end of the day, we have, as you can see, almost all fulfilled the body of the triangle before it broke down. Now, very important. Why did it break down? That's why we cannot take just the triangle for itself. We need to combine more formations, more indicators, and everything we know to actually determine what is the probability of the price going one way or the other. Now, in this particular case, we can see that more or less the triangle is undetermined. We can see that the top of the triangle is not exclusively down or up. That way it's a lot easier to determine if the price will go one way or the other. But once we have a clear breakout of the triangle on one or the other side, we can see that the price deterministically went the other way. So for this reason, what I'm trying to say is that the triangle is used more or less, first of all, to determine when this particular range of movement will finish. Something similar to the accumulation and distribution, which are usually in a squared movement. Triangles, the same way, are actually in a bit different, obviously, form, in the triangle form, are showing you where there has been, I would say, exhaustion of the movement of one particular range from one to another. Now, again, as you can see, in one big triangle formation, we can find several other formations that are inside. That's why I said, depending on the time frame, we can find these formations everywhere. Again, always keep track to the basics of the triangle movements and the basic rules, which gives you the probabilities of the movement of the price going one way or the other. And again, never take this 100% for granted. Usually, we might have a situation where the chart was showing us that the price will go one way, but it went the other, because again, don't forget, triangle formations are not the ultimate. There is no ultimate indicator. There is no ultimate formation. You always need to take a lot more informations, indicators, fundamental analysis before you decide to invest, to sell, to buy in a certain chart. This is how it works, but in the same way, probability is always on your side if you have a situation like this, where you can actually determine a proper formation that you've already tested and trained, and you know how to behave. You can obviously see these type of triangles are sometimes a very good, I would say, indicator for the investors and traders to go in or out from a certain trade. Now, again, don't forget, so far we have passed through levels. We have also done the accumulation and distribution phases, and we have just explained how triangle formations work. We have already done 3 videos, and after the next one, we are going to do a tryout so you can see how you can actually use all these formations and I would say indicators to practically trade in a tryout trading on TradingView. We're going to explain everything. We're going to do several trades, and we're going to see if this analysis actually works on a chart that we don't know. It's very easy to do charting and practically to determine if it's good to sell or buy on a chart that is already passed. But what if we start from a chart that we don't know how it's going to go in the future? That's going to be interesting exercise. So keep track. 5th video, you're going to definitely enjoy it. And we hope to see you on the 4th video, where we are going to be talking about the W and M formations. These are the main formations we need to know to understand how a chart works, again, together with the psychology of the chart itself. I would advise, again, if you haven't, Subscribe to our Crypto Economics channel on YouTube. Find us on our social media, where we constantly inform about all the newest videos we have published and we have done so far for you. You can find us on Twitter, Instagram, Facebook, and Threads, and all this information you can find on our YouTube channel. Thank you very much. See you in the next video from the Crypto Economics channel from the warm Malta.